We've lent £500 million, managing a loan book of just under 250 million at the moment. Lots of property that we lent on over the last 2 years is worth less now than it was when we lent, which was obviously a catastrophic disaster. I remember losing a considerable amount of money. My dad came over to me and said, sometimes you need to know when to fold. Every single person I know thinks their house is worth more than any other house on their street. Lending money is actually very, very easy. Getting money back is the skill. Our lending business is in unbelievably good shape. We've got decisions between shoot for the moon or retreat a bit and run, a very healthy loan book and make multi-millions of pounds every year. My attitude is to shoot for the moon. I'm passionate about opening up real estate to more people. It's not just if you've got a good salary and you can borrow shitloads of money, then you can go and buy this property. The next step of opening up real estate is making it more liquid. A lot of my job is trying to figure out who's bullshitting and who actually needs a bit more time. However, the one thing that we're always watching is what happens right at the end, which is
Hello and welcome to another episode of Property People. Today I'm delighted, thrilled in fact, to be joined by Mr. Duncan Kreeger. How are you today, Duncan?
very, very well. Thank you very much.
Duncan, I've been looking forward to this podcast for some time, and we've tried to kind of arrange it a couple of times and missed each other for one reason or another, but you are one of the most impressive people I've come across in the property space.
Thank you.
Especially in my particular segment, which is property finance. So a quick intro, and then we'll dive straight into some questions I've been eager to ask you, and I think you've got a lot of value to share with our audience. So,
shoot.
You first started your company, a company at the age of 17, and have since built and sold a £120 million valuation business, managed over £400 million of private capital, completed over £2 billion worth of secured loans, and managed a team of over 100 staff, all whilst embracing technology and opening up a real estate investment opportunities to everyone through some recent efforts to bring a mission to bring fractional ownership to the masses and real estate to everyday people. So over the last few years, the founder of TAB, a property finance investment firm. You're very, very, very busy person. And through all the people that I've spoken to as well, especially in the property finance space, everyone always has fantastic things to say about you.
That's nice to hear.
That's good to hear. I can only assume. But before we go into all of that stuff and how you've been able to do all of that in your property career and business career so far,
Yeah.
I always like to start at the beginning, and specifically at school.
Yeah.
And what type of person were you at school? Because at 17, most people go to university or this, that, and the other, but you started a company. Were you incredibly studious, all A-grade student, or were you a misfit?
Probably more on the side of misfit. I mean, I wasn't a straight A student. I didn't enjoy school all that much. I guess to go off on a tangent, there's a good way to start a podcast. I actually had a coffee very, very recently with my old school tutor, Mr. Newman, who I now have promised to call Phil. And we had a random meeting in my office. I walked into my boardroom and somebody said to me, "Got a message for you." And I said, "Okay, haven't met before, but fine." And he said, "My best friend is Philip Newman. He was your school teacher, and he wanted me to tell you that he's been watching what you've been up to, and he's super proud of you, and he wanted me to pass on the message." So I said, "Right, give me his number straight away." Took his phone number, sent him a WhatsApp, and said it would be really good. I met your friend today, and it'd be really good to catch up. And he said, "Name the place, anytime, any place." And he came to my office a couple of days later, and we sat down for an hour, and we talked about some of these things that you're posing. And so it's kind of fresh in my memory. I mean, his memory is that I was absolutely desperate to leave. I wasn't particularly bothered, basically, and that's kind of how I remember it as well. I had a strong feeling at the time that I didn't put much value in the sort of output that was going to come from sitting my exams and passing them with flying colours. All I really wanted to do was be free to go out and explore the world on my own.
Yeah.
And he said you were pretty headstrong about it. That's what you wanted. And there was a time sort of throughout the years where we were trying to sort of instill in you the importance of going through school and doing it properly, and then exploring the world afterwards, where pretty much everyone just gave up and said, you know what, let them go. So I didn't finish all my GCSEs. I didn't do any higher education at all. The first exam that I felt like I properly passed was my driving theory test, which I was super proud of, and I did study hard for. And then latterly, kind of the only other exams I've conquered were CMAP, because I was also a qualified mortgage broker, and we'll possibly talk about that a bit later. Enjoyed the kind of social interaction of school, but never really had any plans to pursue it any further. And pretty much since those days, I've worked every day full time. I would say 9 to 5, but that would be underplaying the amount of time that I spend at work. So, yeah, I mean, that gives you a kind of flavour for it. Definitely wasn't on my agenda to kind of excel in a school environment, but I also didn't want to be too disruptive, and I just felt it wasn't for me.
Yeah, and so not a complete rebel without a cause, but at the same time just felt like this is not serving me. And it sounds like the fact that when you got your driving test, you will study for the things that mean something to you.
Yeah, I'm interested in stuff. I like the idea of upskilling myself. It's not that I don't want to learn. Probably my kind of thirst for learning has increased the older I've got, but definitely in things that interest me and I feel are beneficial to me.
What was, out of curiosity, what was Mr. Newman's subject that he was teaching?
So he was my form tutor. He was actually a PE teacher.
Oh, they're always the best.
So I had sort of twice a day, I had lessons with him, and he coined the phrase, which I really like, which I don't use often enough, so I'll say it today, which was if anyone can, Duncan.
Oh,
and I thought that was very good. He was always very supportive of me. It was never kind of, it wasn't a sort of a bitter and nasty relationship, but I was obviously relatively difficult to manage. I mean, one thing that's kind of been constant throughout my life is that I'm not very good at being told what to do. Although I appreciate sometimes you need to toe the line in certain environments, I've probably got worse and worse at it, and I wasn't very good at it in the first place. And I think that speaks to me wanting to be an entrepreneur, master of my own destiny. I'm not a very good employee either. And it's not because I don't want to do a good job, but it's just that I sort of always navigate towards decision making.
Yeah, it's a common denominator with most entrepreneurs, businessmen, businesswomen, business people, is that they don't become. They always say, like, this famous thing, I'm unemployable because I just don't follow orders very well. It doesn't make me a bad person, but I just always have my own way of wanting to do things.
Yeah, and I like to make my own mistakes.
Yeah.
I like to figure stuff out for myself because I'm not scared of failing or getting it wrong. Obviously, hope not to get it wrong as often as possible, but because that's not kind of a worry, I'm not always looking for validation or support to try and go and make big decisions, then obviously sometimes you do get them wrong. But what I've learned is you use that to your advantage. Don't make the same mistake again. If I was making the same mistakes over and over on repeat, you would expect someone to sort of put a hand on my shoulder and say, why are you doing that? But yeah, I think I'm good at learning along the way and on a path to try and make better decisions tomorrow than I made yesterday.
Sometimes simple philosophies that will steer you in the right direction in life,
Sure.
and it sounds like you've got that in abundance. So how did, from 17, leaving school, not too many GCSEs, didn't hold you back, obviously. What were the next steps from that point on?
I mean, the first real job that I can remember having, so I was never afraid to go out to work, and I'd worked in a fish and chip shop, and I worked at the taxi cab rank in my local high street, where I was trying to sort of revolutionise the whole business and put it onto a computer. My first proper job was working for an estate agency called Urban Spaces, and they were in Clerkenwell.
Yeah.
And I don't think prior to that I'd really thought real estate is my calling. And my first job when I arrived there was they had an electric, what they called City Bug, but it's now kind of an electric scooter. And they said, look, we need you to go out and learn the area and spot building opportunities where we could put boards up. I didn't understand what they were talking about. All I heard was take this scooter and go and roam through Shoreditch, which I obviously did. And then it sort of progressed into looking at the types of properties that they sold, which were loft spaces.
Yeah, I remember.
I absolutely fell in love with real estate and those types of buildings, and I still love kind of loft buildings in New York and London. I think they're great spaces for living and working, sort of big open plan spaces. It was quite radical then. Um, but really what I started to think early on was I'd met somebody who wanted to sell this property that they'd developed, and we went to look at it and value it and see what we could sell it for. And I was interested in, well, how did you buy it? How much did you pay for it? And where did the money come from? And I sort of started to understand that even if you did have your own money, would you use your own money or would you borrow from the bank?
That's
and how
an
many?
interesting thing to learn quite early on.
Yeah. So I think that's kind of how when I was saying, let me free, let me go out and explore the world, what I was trying to say was there's a lot I don't understand, on that theme of I'm happy to learn, I'm happy to sit up all night, research stuff, come up with ideas, test them, see if they work. It wasn't that I was going to get a GCSE certificate at the end of it that I could hang on my wall. It was more about some skills that I could use to my advantage and understanding I like property and it makes sense. And there's always been this thing in the UK about getting on the property ladder and having passive income. Even those sort of earliest thoughts, I think, have all made me look at property and fractional ownership and the things that I'm trying to do in the kind of way that I am now. So there's all these lessons. Sometimes just gaining the experience can take a lot of time. It's not let me free so I can learn something and then that's it. I want to be a property developer and I'm going to develop property in loft spaces in Shoreditch and Clerkenwell. It's that first step of understanding how does the lettings process work? How does the sales process work? And interestingly as well, the people that I worked for there, and there was kind of my direct boss and then the person who owned the business, both of them are people that I'm still connected with now, that I've done business with since, and it wasn't something I was particularly out to do, but doing deals with Alex, who was my boss at the time, later in my career was obviously a big feather in my cap and felt like things had sort of finally come back in full circle.
Yeah, that's a little bit of I can forget the word, but it's like validation.
Yeah.
It's like I'm not completely kind of crazy. I'm not as bad as some people may have made me out think because I didn't follow some sort of rule. I didn't.
Yeah, and I didn't exactly leave the business I left the business because I got called in by Greg and he said, I said I'd guarantee your commission. So this is what you were going to earn. I've changed my mind and you're going to be here. And I said, well, that's it. I'm done then. And he said, well, what do you mean? I said, you just changed what you said you were going to pay me, so I'm leaving. He was like, what do you mean you're leaving? I said, is that definitely your final decision? He said, yeah. I said, well, I'm gone. Got my stuff and left because I just felt at an early age that's not how I would have treated someone young, hungry, energetic who had done everything that they said they were going to do. I was going up to Shoreditch and opening up a shop on a Saturday, literally my first ever job. I'd never done anything like that before. I mean, I was interested to do it and I was happy to do it. I was asked, but, and I've reminisced with Greg about it later saying, he was saying, was that a good idea of mine to do that or not? And I didn't think you'd have reacted in that way. But even under those scenarios, I didn't leave under a cloud of smoke and never speak to the guy again. It was...
Never burn any bridges. I mean,
no.
It has to be pretty extreme if you have to burn a bridge. But I believe that.
I think you said, early on, which was really, really kind of you, and I don't hear it very often. And I'm not really looking for it, that you've spoken to people and they've said good things about me. But I hope that, or I guess more than hope, it's kind of part of me that I want to leave a good impression with people because I never know when we might need each other again. So even if we're not doing a deal now, we're not shaking hands and high-fiving, going out for a drink to celebrate, it's still... sometimes saying no needs to be delivered in the right way as saying yes.
Yeah, 100%. And from your career though, you'd think that having worked in urban spaces, and I remember I was working around Hackney and stuff. I always used to look at urban spaces and think, wow, they are cool properties. Yeah. Whilst I was doing these like grotty little one-bedroom flats and studios, I used to think, oh, that would be actually a good little company to work for. But the kind of natural progression you might think would be to then set up your own estate agency if you wanted to go down the entrepreneurial route. So once you were figuring out this whole finance thing and speaking to developers, where was that shift in kind of let me go in this direction?
A few twists and turns since then before I ended up. So when I grew up, my father was a kosher butcher. So he, had a kind of very different upbringing from a business perspective there, but by the time I'd left school, my dad had had a big career change. He'd become a financial advisor and ended up being a mortgage broker.
Right.
Post me working for the estate agency, I mean, I actually remember taking all of my savings and going to Nike Town and buying a pair of Nike Shocks. That was kind of what I did when I realized my job had gone. So I was sort of getting into the habit of, if I can earn some money, I can spend some money. I wasn't sure at that point. I mean, I felt real estate was kind of my calling, but I wasn't particularly thinking I want to be an estate agent. I think more so I was thinking, how do you build a skyscraper in London? But also entrepreneurial spirit, I was thinking, about putting people together, and if I did find a property but I didn't have any money, how would I do that? And if I could find the money, then where would be a good place to deploy it? Should we still get a bank loan, etc.? But I'd tried lots of other things. I mean, talk about fear of failure. I guess one of the reasons I've become hardened to it is because I'm used to trying lots of things and then not all working out. So I'd had lots of kind of little scrappy businesses around the edges. Give you two wild examples. I had a mail order business. Somebody in my family, one of my uncles, had the licenses for Mr. Men, and I was saying I want to do something. I was just talking to everybody about, what can I do with my life? He said, well, we've got this product. It's a calculator. The internet wasn't really thriving at that point in the same way as it was now. And he said, you can sell these via mail order if you want. And I said, I don't know what that really means. But what I ended up doing was registering a company and opening a bank account. And I took an advert out in Practical Parenting magazine where you could cut out a coupon, send it to a PO box address, and I would send you a calculator. Which was obviously a catastrophic disaster. I spent money building a logo and forming a company and opening bank accounts and having all these adverts drawn up. And I think I sold 5 or maybe 6 calculators over like a good 3-6 month period. But it taught me a lot about, these kind of things around the edges. I was never scared after that to register a limited company and decide how the shareholding was split, who the directors were going to be, and who the company secretary at that time was going to be. So I felt like, although I didn't sell enough calculators to retire, I had obtained some skills of going through that process. So that just felt like another kind of notch under my belt. At the time, I wasn't as positive about it as I am now. Obviously, I thought that was my ticket. And then, to give you another wild example, I had a poker club in Camden. So somebody who I went to school with was very into his poker. I'd always said to him and to other friends that I'm not a gambler. I mean, never really sort of been a big gambler. Don't like playing poker, get bored, do stupid things. But if I was going to go into that business, I'd want to own a casino.
Be the house is probably the best way to win.
Which always was kind of obvious to me. When my friend Adam called me and said, do you want to open a poker club in Camden? I was like, right, be the house. Sounds like a good idea. And we opened a poker club. It was a pretty serious operation, and we had 2 floors, and we had tournaments upstairs and cash games downstairs. I was appointed to the board of the association, the UK Poker Clubs Association, where we were trying to lobby with government about poker being a game of skill and not a game of luck. Didn't have a clue what I was doing. I enjoyed it a lot.
Bold, though.
But it was super interesting. We made some catastrophic errors, which ended up meaning the viability of the business wouldn't work. And the main one was that in Camden, we'd done loads of research. We thought Camden was a good place to be. If you imagine this table, there's a red line drawn around Camden where you can stay open 24 hours. We opened our poker club just here. So we got a knock on the door from the council. Again, neither Adam or I had a clue what we were doing. And they said, you need to shut at like 11 o'clock or something. And we said, well, we can't. And we won't. It's not going to work. And in the end, we lost. And we closed it, walked away from it. I remember losing a considerable amount of money. I remember my dad, actually, he never really gives me any advice or tells me what to do, but he came over to me and said, what's going on with the poker club? And I said, not sure, it's going to be difficult. And he said, sometimes you need to know when to fold. And I was like, I've never seen my dad play cards, to be honest. So, and I was like, yeah, maybe that's, yeah. And I think I rang Adam and said, look, we tried and it didn't work. I never felt bitter about it. I was never annoyed. But I learned two things there. Firstly, kind of check everything in the detail, make sure that nothing stupid can catch you out. And I'm a bit more sort of focused on those things now. Obviously, I'm a bit harder to it, but also pick your partners carefully. And a lot of people come and see me for whatever reason to talk about their business ideas and how things are going. Things are going well, they need money. Things are going badly, they need money. And quite often what I see is good businesses aren't working properly because of a breakdown in communication between two partners. There's usually an argument over money. But sometimes it's just a different direction, different ages, different aspirations.
Sure.
So, yeah, I think choosing your partners carefully is important, because when things go well, it's really easy to get on with everybody. It's when things go badly that you find out kind of more about people.
And so, I mean, from building this casino, this poker game, because have you seen that Molly's game? There's a recent film where she built this thing in the US. It's very, very cool. It's based on a book and a true story. You'd think you just kind of legitimize it, maybe bring it into the zone and do that, but instead you went down back into real estate. So kind of.
Yeah, I mean, I think so. My father, again, had become a mortgage broker. I was talking to him, he's saying, right, what are you going to do with your life? Wasn't that I wasn't working hard, but I'd had a few kind of failed calculator and poker ideas since then. He said, why don't you come in and see what I'm up to on mortgages? I'm focusing more on mortgages now than financial advice. Financial advice kind of bored me. I didn't really want to sit down with people and tell them how to manage their money. But on the mortgage side, I was interested in, connecting the dots, this might help me to figure out how I'd buy my own property one day. And so I went to work in his office. It was in Stanmore, and he basically made a desk ready for me and said, come and help me fill forms. And I was basically his T-boy for a while. And I'd go on meetings with him and I'd fill in forms. And I learned some invaluable lessons working with him about kind of how to interact with people. I remember he said to me, we went to see a client and I said, there's this box on the form that says, how much do you earn? So what am I going to do when that comes up? And he said, what do you mean? I said, I don't really feel comfortable asking someone how much they earn. He said, it's really, really easy. I'll teach you a trick of how to do it. So he said, when you get to that question, you need to say, how much do you earn? And then they'll just tell you the answer and then write it in the box. So I was like, okay.
Overthinking
I'll
it.
I'll try that. And then after that, I went to the first meeting. I was like, so one more question. I just got it says here on the, how much do you earn? And he's like, £75,300. I was like, oh, that was easy. And I was like, right, that's it. Fine. So you just got to, it's things that you build up in your own head. And once you try them out, so I think it's that sort of fear of, well, this thing's going to be difficult for me, and then you try things out and realise that actually everything's okay. I mean, when you'll know this better than anyone, but when somebody wants to get a mortgage and you're trying to help them with it, they'll give you anything you want to know. You're not selling them anything, you're trying to help them obtain something, and also you're asking for legitimate reasons. And I guess it all sounds pretty obvious now, but I remember being young and thinking, well, that will be difficult. And then I qualified as a mortgage broker. At the time when I started with my dad, mortgages weren't regulated, and they started to become regulated. So it was people applying to be a regulated mortgage broker, and I just felt there was an opportunity to do that while I was young and interested. And I got through those exams relatively easily because I thought it was all pretty logical. I guess my brain thinks in that way. I understand kind of numbers, and they didn't seem like difficult concepts to me. And following on from what we said about school, at the end of that, it meant that I could use it to earn money and to upskill myself. So I was interested in doing that.
And so with the poker stuff, and then effectively like a case manager, then CMAT qualified, what age were these different things?
I'll have to come back to you. I can't remember exactly.
Were you like teenager or kind of 20s?
Yeah, I mean, very early 20s, if not 20, yeah.
And then so now you're a CMAT broker, and then where's the next?
I mean,
This episode is sponsored by Tab Lending. Tab provides bridging loans for property projects and property professionals. We work with Tab via Merry Oaks as they understand short-term lending requirements. They have the experience to transact swiftly whilst also taking a prudent approach to risk. Tab Lending also matches people who want to borrow with people who want to invest. Tab's foundations are built on their key values: trust, transparency, and innovation, whilst giving customers a personalised and efficient experience. Working out of their North London offices, Tab's small but agile team cultivates a collaborative environment where everyone learns from each other to ensure they are constantly improving and also evolving their service. If you would like to share your deal with them directly, you can find their details in the show notes. Now, back to the show.
So I was a CMAP qualified broker. I was seeing clients myself, gaining more confidence, and then as well as arranging Halifax 5-year mortgages for people, sometimes there was someone saying, look, I need a bridging loan because I want to buy this property and it's not going to be tenanted because I need to do some work. And I was introducing loans to Mark Goldberg at what was then Lancashire Mortgage Corporation, is now Together Money. And I remember speaking to Mark and saying, I might do this myself one day. And he said, why don't you come up for lunch and I'll tell you all about it. So I went up for lunch to meet Mark in Manchester, and I said that I think I wanted, I could see really quite early on thinking, if Halifax are lending this guy money at 5% for 5 years and Together are lending at 15% and the same loan to value on the same asset, if I was going to pick one, which one would I do? And I remember saying to my dad, I think I want to start a lending business. And he said, well, you can't start a lending business without any money. And I said, well, yeah, I think that was good advice. And I said, well, how did Halifax start? And he said, well, what do you mean, how did Halifax start? He said, they're a bank. I was like, okay, so how do we become a bank? And he tells this story better than I do. But I do remember sort of being interested in, well, if you're going to start somewhere, we should start pretty soon, and then hopefully it will grow into something. But Mark basically said, you need to use, if you're ever going to do this, you need to use valuers, you need to use surveyors, you need to have a lawyer, and they need to act for you, and they need to do this and that. And again, a lot of those lessons have stuck with me. He would have always said loan to value is everything. And so he also said at the time, look, if you want to use your company name on our documents, then make it look like you're the lender, but actually use our money, which I'd now call branded lending or white labeling. I was like, right, are you sure I can do that? And I actually made a logo for West One Loans, which is the name I'd come up with. And I was photocopying, cutting out my logo and then sticking it on the bit of paper on the photocopier and photocopying the terms so they said West One instead of Lancashire on them. And the first loans that we wrote going back throughout my career was where I was acting as a broker and we were calling the lender West One Loans, but actually the money was coming from Together. So those are the very first loans that we wrote. And then a loan came up one day and I'd now sort of telling people I'm a qualified mortgage broker, but I've got my own lender. And I was sort of talking to anybody and everybody who would listen to me. So as well as some kind of failed businesses that we talked about, I had got myself involved in some property transactions. So one of my mortgage clients said, I've got this building. And I said, how do we get involved? And I ended up making some money. So I was doing okay by that point. Spent some of it on a poker club, on some of it on a Porsche, but I'd managed to keep some back. And I think from that point on, so then Stephen Wasserman, who was my business partner at West One, he'd gone completely the opposite route. So we started this podcast, it would have gone completely opposite ways in that he got really good GCSE grades, did his A-levels, went to Leeds University, we stayed super close. Then went travelling, and then sort of came back from travelling looking for a job, all while I'd sort of done all those things that we just discussed in the meantime. And I said, I want to start this lending business. I've got an idea and had some scrappy notes and we talked through it. And I said, come on board and help me and I'll give you £6,000 for 6 months to come and sort of be my partner and see if we can make it work before you get a job in the real world. And he did, and we made it work by going to talk to everyone we knew and trying to convince basically private investors to say, if we lend this guy £100,000, if I can get two people to put in 50,000 each, then we'll charge 15% per annum. We'll keep 3, pay investors 12, and that simple concept is what became West One, basically. So we got to a point where we didn't need to use Lancashire's money anymore. We found a couple of investors, one landmark investor called Mark, who came and said, I met this accountant, and I said, at the end of the meeting, can I talk to you about my lending company? And he said, yeah. And after the meeting, I said, look, I've got this idea, want to get private investors, and we're going to do this sort of lending on property. And he said, I've got the perfect person for you. He's absolutely crazy, but he's been telling me that he wants to lend his money on property, and I think the two of you should meet. I met Mark, and he said, I like it. I want to do it myself, but I want 25% of the company. And I was thinking, 25% of nothing is yours, because we haven't really got up and running yet. And then almost, I'd say within kind of a 6-month period, what happened was the mortgage market was getting more difficult. My dad was starting to help out on West One loans, which I'd started in. It's very similar to like a small office in his office in the corner. And I said, so I'd registered the company, 90% me, 10% my dad, because I just thought that's what you did. I was working out of his office. Then Stephen came on board and he got 25%. Then Mark came on board and we divided it 4 equal ways, 25, 25, 25, 25. And Morgan Sterling, which was the mortgage brokerage, was starting to suffer from subprime mortgages and sort of the stuff that they'd been doing. It wasn't as busy, and the lending side was really picking up momentum. Wow. And we met this broker. I met a broker, actually, who haven't been through this story for a while, but met this broker called Danny Waters on an aeroplane that Mark Goldberg had invited both of us to go to Germany to watch the World Cup. So that, whenever that was, that's sort of connecting the dates. Shit. I'll have to look it up. And I sat on the plane next to Danny, and I said, I'm going to start. He was a broker, and I was going to start my own lender. And he said, if you get this off the ground, we will support you. I was like, right, it's my first broker. And he did. And he supported. He was in Edgware, and we were in Stanmore. He started introducing us loans, and we started getting better and better at it. And that's pretty much the sort of story of how we got up and running.
So you kind of ended up going down, so from being a mortgage broker and then saying, okay, actually there's a good opportunity here to do our own white label loans. And then you kind of got into the peer-to-peer effectively, because you're starting to borrow money from private individuals, and then lending it out. And then you got your first broker on board just from meeting and greeting.
Yeah, I mean, peer-to-peer wasn't a thing back then.
Yeah.
And people didn't use, it's hard really to cast your mind back, but people didn't have iPhones and transfer money to their friends over the table, check your online banking. I mean, it wasn't really that efficient as you would expect it to be now. So, you know, we ran everything off a spreadsheet and bits of paper and PDFs where we'd, you know, send out emails to people to try and show them what our deal looked like and convince them to come on board. If we fast forward to what I do now, it's all very online focused with online AML and KYC checks. People can open their account, check their account in real time. So that's before peer-to-peer lending existed. And then peer-to-peer started picking up real momentum, and that's kind of how we got sort of kind of pigeonholed into that area. But we got regulated by the FCA to operate an unregulated collective investment scheme, and latterly became an alternative investment fund, and I held the controlled functions for that business all the way through. So they're all major milestones and steps that we'd never been through before.
What was that? What was going through that process like with the FCA to get was it easy at the time? Because right now all I hear from everyone, whether it be brokers or anyone trying to put together collective investment schemes, it's either really expensive, really arduous.
It depends what you mean by difficult. I mean,
Did you find it really was it a complete headache, and were they being really difficult about like every little last thing, or was it relatively? Because sometimes actually, yeah, get through these regulations. It's kind of like this is
Just
a
got to
barrier
get
to
good
entry.
you've got to get good advice, and you've got to understand what you don't know, and you've got to figure out how you can learn it or bring someone on the journey with you that can cope. I mean, I don't have all of the skills myself. I mean, I've done every single job in a lending business, from sales to underwriting, collections, funding. But they're not all my best skills. So I think it's important when you're building a business or running a business to focus on the things that you are good at. Filling out regulatory forms is not my core skill.
What
So
is
we
it?
had advisors around us that held our hands through it and made sure that we answered the questions correctly, and advised us that if you say this is what you're going to do, this is how you need to do it, and this is how you're going to report. There were kind of baby steps through it, but there was nothing particularly daunting. There was never a time I thought, this is going to be more hassle than it's worth. We sort
Right.
of,
That's the point.
yeah, made the decision. And I hear what you're saying. Some people say it's easy, and some people say it's hard, and I think it's hard compared to what.
Yeah. And one of the things you just mentioned there is like stick to the things that you. What are the things? Because if you've done literally everything within the
Yeah.
business, and then you get the opportunity to do the thing that you like the most, that you're
Yeah.
good at.
Yeah.
What would you say that
Well,
was
I think
for you?
if I could boil it down to a few things, I've tried to do this exercise recently. I'd say strategy. Kind of thinking big about the direction of the business, big product changes, strategy. I'd say covers obviously quite a wide berth, but it could be anything from the strategy within our sales department. How do we outreach people? How do we connect with them? How often? This kind of constantly, as a business grows and as the climate changes, what you thought you knew or what you were good at last week might not be relevant if inflation goes to 8 all of a sudden. You've got new things to consider. Nobody's an expert in how to deal with mortgage rates rising at that pace. So you have to sort of pivot. I think what I'm good at is not being stuck in my ways, being open to change. Just because something's worked before, I think I see people very kind of, stuck in their lane. I'm quite the opposite. I'd quite like somebody to come and say, look, have you thought about this? You could do it in a different way, and I'd be quite free and willing to make wholesale changes if I thought it would benefit us and our customers.
Absolutely. The only constant in life is change. So if you
Sure.
and it's the survival of not necessarily the fittest, but the most adaptable.
Yeah, for sure.
So if and talking about that as well within the lending marketplace, especially when it comes to bridging lending, you started quite a few years ago when I think it was still in its infancy, in its current form, certainly.
Yeah.
You were kind of one of the pioneers of doing it. So in terms of where we are today, where we've got fierce competition, did you feel that it was easy at the time? This is quite good money. This is quite relatively easy. And compared to now, how have you adapted to be able to kind of make a lot of noise in a very crowded marketplace?
Yeah, I think staying on that theme of adapting, I mean, it's obviously, I've been doing it now for just over 5 years. We've lent £500 million, so significant amount of capital. We're managing a loan book of just under 250 million at the moment. That money comes from a pool of high net worth individuals who are active on our platform, and 2 institutional funding lines. And, if you'd have asked me at any point over the last year or two, I'd probably give you a different answer of what's important, how we're going to make a difference. Sometimes it's price, sometimes it's loan to value, sometimes it's technology and the freedom of information, but it's not always, that. I guess what I felt really strongly when I started again. So, West One was a really good news story. Business went really well. The 4 of us had a sort of slightly different idea about what we wanted to do next. Stephen and I were young and hungry, and we felt there was an opportunity to double down and grow. Mark and my father were both kind of really happy with how things were going and wanted to, keep the kids quiet in the corner. But in the end, we sold the business, and I stayed for 2 years as the managing director, and that business has gone on to become one of the largest non-bank lenders in the country, and I'm super proud of my experience there and my history. But then I woke up one day and said, I don't want to go to work today. I hadn't had a boss for a long time. The business was going well, but I was being asked to do things that I didn't necessarily want to do or didn't enjoy, and I phoned Danny and said, we need to have dinner. And he said, you're not coming back, are you? And I said, no. And we shook hands and we did a deal and I moved on. I had 2 years where I had non-compete, so I wasn't allowed to go back into lending or broking. And it was the first time in my career I'd kind of had some time off to think, right, what do I want to do with my life? Do I want to go and sit on the beach and sip margaritas, or do I want to go again? And I did genuinely sort of question myself on all of those things, and I felt sort of eager to get back to work. And I've had this idea around fractional ownership, and that's really where Tab came from. I wasn't at that time focused on building a new lending business. In fact, I would have said to you, been there, done that, got the T-shirt. I think there's a bigger opportunity around people owning property in their phones in the same way that they do with art and wine and gold and cars and other assets. But I think one thing that I felt really strongly about was using technology to my advantage. That was the big difference between what we'd done before, where we were building technology to look at our system and to send it to someone, rather than the whole thing being built within a platform that did different things for different people. And obviously technology moved on a lot in the 10 years since I'd started West One. So I felt like technology was something that could make the business more efficient and help us to grow without necessarily needing all of the same things that we had before. So what was the question again?
The question, it was...
Or what's the question now?
Well, the question now is... well, actually, literally, I've got written here, how has embracing technology kind of helped you? And why have you made it so? Because I remember actually when the first time we met over a lunch at one point, where one of your friends from school was acting as my broker for some of the deals that I was working on. And actually Adam I'd bumped into as well. So I'd kind of been hanging out with your friend without even knowing you. And so with Instagram and the way things go in life, you start following people that you don't necessarily know, but they're quite intriguing people. Yeah. So I've been following you through that, and I've noticed that you've always had a significant emphasis on the importance of technology.
Yeah, fine.
And it's interesting that you kind of gravitated from the previous question to that.
Yeah.
Why is technology so important to you?
Yeah, so I think first and foremost, I look at it. I looked at the business. I guess I look at it as if I was a customer, what would I expect? Right. So going back to, I guess what I would expect if I was investing my money anywhere is to have access to real-time information. So when I started logging into my bank and I had an app for my bank, I could easily compare what I thought was good against what I thought was not so good in different banking apps. And ones that I could go into my account, see all my transactions, and they would send me emails about my spending or alert me about, stuff that I wasn't asking it, I found really valuable. So I was thinking, if we're going to manage people's money again, it should be more in the vein of access to real-time information. And obviously started the business before COVID, and having then been through COVID, being a more modern business that didn't have servers in a cupboard somewhere, and when people needed to start working from home or working from a different country or whatever it may be, we were really well set up for those things. So it was a kind of big accidental achievement that we were very modern, cloud-based, but also our customers didn't have any break in the way that they interacted with us or the business, because it wasn't something that we had to make wholesale changes to. And also, I guess, I was hopeful, but I realized that the more data we had, the more powerful it would be to be able to understand it. Even though we were a fledgling company, we didn't have any deals and we didn't have anything yet, I'm kind of always in the knowledge that we're going somewhere. If I didn't think, the business, our lending business is in unbelievably good shape. And we could, we've got decisions between shoot for the moon or retreat a bit and run, a very healthy loan book and make multi-millions of pounds every year. My attitude is to shoot for the moon. So when we were building the tech, it was me thinking, well, if 1,000 people are trying to log in at the same time, what are they going to want to see? How's it going to want to work? But where it played us really, really well was when we started applying for funding lines. And we were able to show all of the data going back to day one, to the very first inquiry. which broker gave us which deal on what day, how did that loan perform, how did the payments come through, what's our exposure to London, to the southeast, to the M25, to commercial versus residential. We didn't have to go away and build reports and sort of sieve through files. It was apparent to me at that time that the data was really, really important. The fact that I can open Power BI on my phone and I can give you all of those things about our loan book up to date in real time is different from what the market does. I came from a business where we had to get to our board meeting so that someone could tell me what our loan book was at the end of last month. And now I can tell you what our loan book is this morning, post any redemptions or completions that we may have had already today. So that's why I lent into technology, and also the reach. So a reason why I like doing these sort of podcasts and why I like my sort of Instagram stories is that I can reach 500 people in one go. So if I sit down and have a coffee with you, which would be nice to do because it's been so long, there's only so many times a day I can do that. I might reach 3 or 4 or 5 or 6 people. Whereas if we have a good conversation, we're happy to publish it or share it. I can tell my story to 500 people or 1,000 people in 1 hour session. I think it's important to use these tools to your advantage. Otherwise you become a bit like my mum, who would say, I hate Facebook and I don't understand it. But then she'll phone me every day and say, oh, your dad showed me you did this and your dad showed me you did that. It's like, you just get it yourself.
Yeah. No, I'm a firm believer that we have to embrace technology if we're going to move with the times. I feel like we're in the 1920s of the last century, kind of like, if you imagine where technology was in the 1920s compared to where we ended up in the 1990s, we're in the 2020s and we're kind of primitive and we've got to keep up. Otherwise, the competition is just going to take over us. And being able to report, interestingly, so this system that you built, was it bespoke? Is it from scratch?
Yeah, so built a system.
Is it, I mean, you don't have to give me how much it cost you, but is it 6 figures, 7 figures?
I mean, so the history is, I wanted to start a fractional ownership business where people could own property with us. I went to meet a firm actually in Shoreditch, around the corner from Urban Spaces, they were called Elemental Concepts. And I said to them, I want to build this app where people can buy property in their phones. And I paid them an absolute fortune to do an app discovery and to produce the minimum viable product. And we launched it in the App Store. And the day we launched it, I rang them up and said, it doesn't do this, it doesn't do this, doesn't do this, doesn't do this. And he said, yeah, none of that's in the MVP. If you want to do that stuff, we'll send you a quote. And I was like, right, that's it. I'm done. This isn't going to work. And so I spoke to a guy called Mark, who's our technical director now at Tab, who'd done some work for us at West One when we started to become more system orientated. And I showed him what we'd done so far and said, how hard is it to pick this up and run with it? And he said, let's just start again from scratch and we'll hire one developer and it will be a bit painful, but instead of paying 30 grand to do the next turn, you can pay 50 grand a year and you can have someone working full time for you. That person was Kevin. Kevin still works now full time for the business as well. And we've got a team of 5 full-time developers, and we build everything ourselves. So it's been, to say how much have we spent on it is a difficult one to answer, and I'm not typically one to make stuff up, so I can have a look because it would be interesting to review. But also, we're building things now that we didn't think we needed then. What we've built does way more than we set out to do in the first place. And now we're only building stuff that's actually useful to our customers or something that can improve the business.
So it's more of an evolutionary thing rather than saying, hey, we spent £100,000 and we've got this great thing. And actually that's what I've been hearing more and more. Anybody is building anything to do with something techie is that you need to have actually somebody ideally in-house to be able to continuously maintain all the little bugs that come up and then evolve it as well.
Yeah, and I think, but the thing about a system is people don't really know what they want from it. So, and different people want different things from it. So our sales guys obviously want different things from the finance department, and our underwriters, probably half the business doesn't know what they do on the platform. They've all got their own sort of sections for it. But when tech release something, they release a new feature internally or externally, they'll say to people, can you use it as much as you can, give us some feedback and tell us whether it actually works or not. So rather than us specking it all out and then they go away for 3 months and they build it, we say it would be really cool if the system could do this. And then they'll come back in 24 hours and say, we've mocked something up and we think this what you were talking about? Say, no, it should have been actually more like that. And then we iterate and iterate until it becomes something that's useful and that works. So it's much more agile than kind of we spent some money and we built something and whether it works or not.
Where does the so I've been hearing about underwriting and how AI is going to kind of take over the underwriting process.
Yeah.
What's your thoughts on that?
Well, I think, I'm pretty sure that AI will have a massive impact on everything we do. I mean, I'm personally using it to my advantage on a daily basis because I like the idea of having, I call Lynn, who's sitting in the room, Lynn GPT. So Lynn looks after me. But, I like the idea of having Chat GPT in my pocket and asking it stuff all day long. I mean, on the theme of wanting to upskill myself, it knows, I know there's this kind of thing about Chat GPT becoming cleverer than humans at some point, but it's already way smarter than me. No doubt in my mind. I know a little bit about some things, but it knows a lot about everything.
Yeah, sure.
So in the past, when I catch up with a lot of like my work kind of late at night when everyone's gone to bed, because that's when I've cleared my meetings and, I want to go back through my emails, make sure I haven't missed anything, plan my day, plan my week. I've literally got it like sitting up next to me and I'm checking stuff all the time, helping it to draft emails, helping it to, new business ideas, researching stuff. I mean, I'm using it a lot. And
Wow.
I know that it's really the very, very, very beginning to think what it will actually be able to do for you when it understands you more intimately and understands what you're looking for. It's a long-winded way of saying I think it's virtually impossible that AI shouldn't be able to do a lot of what humans do. AI underwriting in mortgage lending is actually very old. Computer says yes or computer says no, as the famous catchphrase has been going on a long time, which is kind of algorithmic. If these things all stack up and you can check it against your policy, then it should be a loan you can do. Sometimes having human interaction can only cause human error. And I think that I'm not saying right now everybody should be more reliant on AI than they should be humans, but I think there's less chance as the AI gets better that it will make marginal errors when somebody gets comfortable or they think they know something, they don't think it's necessary to check or double check. So we've actually built some AI tools into our platform already, and we're very focused on building out more. And I'll just give you a couple of examples. So when a valuation comes into the business, we load it into the platform, we click a button that says summarize this valuation. It will then read the valuation and cross-check it against our policy, and it will produce a one-page that says, I've checked that the valuation, that the valuer has professional indemnity insurance and that it's in date, or you need to check. I've checked that they're within 30 miles of the property. I've checked that there are enough comparables and that they're within a certain distance from the property. So it's not saying to underwriters you shouldn't check these things, but it makes their job much easier. And what I see is what I see in the near future is underwriters being able to use their brains to make risk decisions rather than scanning stuff, uploading it to a document, checking something off on a checklist. There's nothing to stop AI already saying, you've had an email in your inbox, it's ID for Sam Lowney, I've posted it into his file and I've checked that it's in date and I've checked on the checklist that we've received it. Undoubtedly. That's a kind of very, very short-term thing, not a kind of future big thinking. And I think the answer to your question is that highly skilled underwriters should be able to get through many, many more files with a highly skilled assistant helping them to do the sort of more basic kind of admin-y tasks that go with it.
Which is what we want in the system in general, is to have faster transactions, because one of the pain points of property in general is that everything takes forever. I mean, is it going to solve the planning issue? Is it going to solve the conveyancing issue? Well,
probably conveyancing.
Conveyancing, I hope so. Yeah, exactly.
Yeah, I mean, it should be able to get you through the gates much quicker. I mean, if I want to write a presentation and submit it to my board and talk them through what I'm thinking, I can either take a month over it or I can take a day over it. And I think if you send in a valuation and our business says, yeah, we like it, something we want to do, and it turns out 2 weeks later that the valuer isn't close enough to the property and we'd have to go and do a new one, you're going to get pissed off.
Yeah.
So well, I sent it to you on day one. It's the first thing I sent you. Why didn't you check that? It's not immediately obvious that somebody should be reading every word on every valuation at inquiry stage. But you just want to know at the outset, is this good or is this not good? And so do we, because we also don't want to waste our time. So I do see AI having an absolutely massive influence on our industry. And when I think about the fractional ownership business, I want to be able to provide people way more information than they would be able to obtain themselves in a digestible format or tailored to that individual. So if you're a high net worth property expert, you want different things, different information about that property. But if you're a novice, you want really basic information. You want to understand, and I think AI will know who it's talking to and how to communicate with them. I think one of the most powerful things that I've seen around AI is education. And I think every business could benefit from better education as well, educating our customers, educating our staff. So I don't think it's long before we say, here's our lending manual. Can you write a training can you write a training program for it? And then can you train all of the staff and give us the feedback, and then go back and work harder on those that are failing on things and teach them the bits and
It's almost like to create the test as well and then mark them out and just kind of back and forth.
Yeah, and that's not kind of coming in the future stuff. That's what it can do now if you want to use it to your advantage.
The fractional ownership stuff as well. I want to dig a little bit more into that.
Yeah.
And where that enthusiasm comes from to bring, in the same way that we've got either Bitcoin or stocks and shares and Forex and everything on our phone, why are you so adamant that fractional ownership needs to go the same way for property?
Yeah, I mean, caveat that it's sort of kind of almost as a disease. I'm like almost obsessed with this, and I'm sort of open-minded to the fact that maybe everyone else doesn't think the same way as I do. I think first and foremost, I believe it's just a matter of timing. So you talked about the 1920s, and now the way I look at things a lot is what I did as a kid and what my kids will do when they grow up.
Exactly.
So one thing that they won't do is ever go to a bank branch with a paying in slip and a checkbook. My kids are just never going to do that. They'll look at it like CDs or floppy disks.
Yeah, exactly.
And I think in the future, they'll be more used to interacting on their phones with any sort of investments or their own properties, turning their lights off. Everything will be more in their phones or in their glasses or whatever else that it is that they're wearing. I should have brought those today. And I fundamentally, having done, as you said right at the beginning, literally thousands of property transactions, so a lot on the lending side, but also multiple deals and companies that I've been involved with that have bought and sold property and rented it long term or refurbished it, built new from scratch. I do think that the system is fundamentally broken. I think that firstly, debt is pretty much the only way to buy property. There's either get a mortgage or don't buy it. That's the only option currently. And number two is the whole legal process and the land registry and the buyer and seller arguing about a covenant from the 30s where you could or could. The whole thing is a nonsense. I think freehold and leasehold is also very strange, but let's just park that for a minute. So it's coming from a place where I think there is something to actually fix here. It's not just, it would be great to have my own app. I just think that if you've bought a property and you've employed a lawyer to do the legal work properly, then I should be able to rely on that as well. I don't need my own lawyer to give me their opinion. In fact, I don't really care what their opinion is. I just want to know if it's good or not, if it's going to cause me any problems. So one of the ideas around Tab Property is that we buy a property, we do the legal work, we use breaches a lot for the legal work that we're doing at the moment, but we want to use a really good lawyer that is maybe better than you would use if you were doing things on a shoestring.
Yeah.
And then I want to be able to say to investors, we've used breaches, this is the report on title, and anybody that owns this property, either long-term or short-term, can rely on the fact that we've done this work properly once and it's good. We're not selling the whole property off platform again. So it means that as a buyer, if you want to buy £1,000 share of that property, that is less than you would spend on the actual legal fees just finding out whether it's a property you should buy or not. And then you'll start earning a return on your £1,000 and own a piece of property. So yeah, as well as being a debt provider for my whole career, I look at real estate and think there surely should be another way for people to get involved and earn some, like you can in the stock market now, or like you can if
You can own a piece of a company, you can own a piece of... Yeah,
everything.
so why not real estate?
Yeah, and the fact that, one of the only objections I've had is that, well, it's never, and nobody's done it yet, or it's, there's a reason why it hasn't happened. And I'm just much more on the side of where you are, which is, well, if I can buy shares in a company, or I can buy a piece of a Picasso, or I can buy gold. You don't buy a gold bar and put it under your bed anymore. If you want to invest in gold,
you
used to have to go and put it in the drawer somewhere or put it in a safety deposit box. But I can buy gold during this conversation. I can buy as much as I want. I can sell it again if I change my mind.
I completely agree with you, and I think it is possibly just down to a matter of timing.
Yeah, for sure.
In the same way that Zoom was kind of out before COVID, and it just kind of became the thing that now everyone's doing. And we're in an office right now where they're literally doing back-to-back video calls. That just never used to happen.
Yeah, for sure.
And also something that you said right at the beginning about when you were working in the cab office and you were trying to computerize everything, you're probably just a few years ahead of what Uber was.
Yeah, and I think, look, owning property, like people clubbing together and owning property is not a new idea. Joint ventures.
Exactly.
Not that long ago, you used to have an accountant who'd come round and he'd get his ruler out and he would write in the ledger who owns what and how much rent we got and how much we had to pay the bank. I mean, that was the only way. Then spreadsheets came out and that was revolutionary. And you could email things around and people could be updated without having to wait. Imagine waiting for a letter to arrive. It seems almost archaic.
Another world,
Another world, literally. But then the next step is, I'm passionate about opening up real estate to more people. So, it's not just that if you've got a good salary and you can borrow shitloads of money, then you can go and buy this property. And also the next step of opening up real estate is making it more tradable, making it more liquid. I think one of the reasons why property is seen as a different asset class is because it's so difficult to get your money out. So if you finally put your deposit down, buy a house, get a mortgage, and you think, I need to get my hands on 10 grand, it's virtually impossible. I mean, your options are go back on the market, meet an estate agent, hopefully he'll find you a buyer, his lawyer's going to argue with your lawyer or her lawyer, they're going to argue amongst themselves, and you won't know after you've spent thousands of pounds on potentially abortive fees whether this is going to happen or not. And then the price might change because property's notoriously not the type of business where you shake hands on a deal when you see it through. It's the opposite. It's get all the way down to the end and then start negotiating. And I just think all of these things mean that quite rightly people are wary of buying property and owning it. It's a lack of understanding of which properties to buy, how to manage them, what type of tenant I should have. So it's about kind of offering a professional service on the top where we take properties to market that we've done extensive due diligence on and we think would be a good investment for people, and then allowing them to access it without having any debt. No mortgage applications, no mortgage broker, no lawyer, no estate agent to talk to, no abortive fees. And it means that I can actually just put my money into that property and I can see in my dashboard that I own 1% of this property and I will get 1% of the income as and when it comes in.
And so it's 100% owned cash. It's not,
Yes.
There's no debt on it at all.
Correct.
Understood. And so just on that, two questions come to mind. One is there any need for any of the blockchain technology that kind of helps the ownership structure from a technology point of view?
And the other question, because I'll come back to that one.
And the other question was FCA regulation around retail investors.
Fine, yeah.
Again, we talked about...
Yeah, so let's do them in reverse order. So when I decided to start this fractional ownership business, I went to see a lawyer who had acted for me at my previous firm, very, very well-respected regulatory lawyer, and I said to him, right, I need one of these and one of these, collective investment scheme. And he said, well, why do you need that? And I said, well, that's what you've advised us that we need in the past. And he said, why would you want to be regulated if you don't need to be? And I said, well, I probably wouldn't. I've always seen it as a kind of badge of honor, in that it's easier to talk to investors. But my biggest struggle, and the reason we stayed discussing it, was I want to open up real estate to people that can't afford to buy property, not to high net worth individuals who are the only part of the market that can. So I spent some time exploring this with him, and we came up with an unregulated structure that works similar to how the loans work. So we're not regulated, and we don't need to be regulated, and we've got robust advice around it. We allow people to participate in loans and property investments via a trust structure, which is a pretty well-trodden path. And we're constantly assessing the regulatory landscape and looking at different businesses. What I didn't want to do is say, we're scared of regulation, so we should go and get a collective investment scheme, which actually isn't fit for purpose and will prohibit us from doing what we want to do. I mean, funnily enough, property isn't regulated at all, as you know. So any developer can build a property, sell it for more than it's worth, guarantee rental income for years on end, and they're not subject to regulation. And I think there should be more regulation around the property sector. But really, in some respects, what Tab Property is we are an estate agent. We're going to landlords and saying, we can sell your property to a whole pool of investors that aren't going to come and look at your property if you put it on Rightmove through a typical estate agent. They don't have enough to deposit, they don't have borrowing power, and they don't have the wherewithal to manage it. So we're kind of saying, we'll sell your property on the open market, but to 100 people, and we'll be the buyer. So it's, it's kind of, this business is becoming sort of different things to different people. But at the moment, we don't feel the need to be regulated, but it's something that we're watching all the time.
Yeah, I mean, if you taking good advice, it was always like the collective investment scheme, and then, it was somebody else that actually who bangs on about this stuff, and being in the finance space, the FCA and all that, we always kind of have to come across, do everything correctly, which is a good thing. And,
of course,
it's there for the right reasons.
No, I absolutely agree.
Blockchain.
Yeah, so I think I've thought a lot about this. So to give you the background, all of Tab's platform is built on Amazon Web Services on AWS. So although we're a tech firm, especially, if we're trying to value the business from a market perspective, we'd say we're a technology firm. But in reality, we're just using technology to our advantage.
Right.
So we're a property and lending business that understands technology, and we're piecing together the best bits of available tech. So we didn't build our own ID verification software. We've just patched into whoever does the best and quickest turnaround. And when it came to, and I'm super interested in blockchain. I'm not really a big crypto person, but I do think it's really interesting just from a financial landscape that you can do stuff without the banks, and transfer money internationally. All these things are kind of interesting to me, and I think the direction of travel as well. But I think the blockchain is very, very impressive. And the same way that my parents thought spreadsheets were good, I think that the blockchain is good. And basically what a blockchain is an immutable ledger. So the same accountant that would have been writing stuff in his book and then might have had to cross something out or change something when he figured it out. I like the idea of once it's written down, you can't change it. And I've always thought that tokenizing the blockchains, the best use case I've seen so far is tokenizing an asset. So these things, I should guess where the question comes from, fit really nicely together. What I didn't want to do is become a sort of crypto person. So I want to bring real assets to real people. And so I decided early on to just park anything crypto and blockchain related to the side. But we decided to build the platform on QLDB, so a database from Amazon Web Services, which is basically a centralized blockchain. Right. So it's an immutable ledger. And I think the idea is that we're trying to embrace as much of the good bits as we possibly can, without putting people off that think, yeah, it's great and I love it, but I don't want to transfer my money into Tab coins, and therefore we're not going to do it.
Yeah, no, that's fair enough. I again, it's all about technology. It's all about the future. It's all about embracing these things, harnessing them to propel all of us forward in the right direction. Going back to lending,
Yeah.
a question or a thought out by some people.
Not you.
Not me. My friend down the road. Do lenders influence valuations by picking the values that they will value how the lender wants them to value? I.e., if something happens in the news, you ask the valuers to be conservative, i.e., which is in code. Just make sure you knock off like a couple of percent off.
Yeah, I mean, it's not something I've ever been involved with before, and I think whether a valuer was valuing something up or down, other than what they really thought it was worth, would be a huge concern. What lenders do and what we do and we have done over the years is we have different tiers of valuations. You have an open market, a 180-day or a 90-day, and I think that's an area where we can use that to our advantage. If there's a big discrepancy between what a property would get in a 6-month sale over a 12-month sale, that would give me cause for concern. And if a 90-day value was exactly the same as the open market value, it might make me ask more questions of a valuer as well. So we try to we manage our valuation panel extremely carefully, and we're very nervous of won't proceed with somebody that has their own, on the borrower side, their own relationship with a valuer, and I think it should be pretty much the same on the lender side. So no, it's not something I've seen. It's something I've heard. I've experienced it myself when I've bought stuff and sold stuff, and the valuer comes around and says, "I think it's worth 100 grand less." My argument to the valuer has always been, "Well, go and show me one for 100 grand less, and we'll buy as many as you can find." But I think valuers have a very, very difficult job, if I'm honest with you. When the market's going up, they don't want to get too carried away, and when the market's going down, they
get loads of stick from
they
everyone.
get loads of stick from everyone. And I think I think people need to understand that evaluation is what somebody's view of the property is at any time. Having had to go through selling property when things don't go according to plan, one thing I've learned as a lender is that something's not worth what a valuer says it's worth when it comes to a distressed sale. Every single person I know thinks their house is worth more than any other house on their street, and they'll give you reasons why. It's got a bigger garden, it's got a better front door, the paint on my walls is better, my sink's better. People just, they get emotionally attached to property. It's not just an investment, it's an emotional thing as well. So I think...
And most of this stuff is evidence-based anyway, which is what I always bring back to, like, they put the comparables on the table. It's like,
yeah,
as long as they can provide the evidence, and they always allow you to kind of provide counter evidence and stuff. So I think most lenders that I know, they will use the 180-day, 90-day valuation, and as long as they're upfront about it, then there's no qualms or any issues with that. How many? Because you've got good data, I'm not sure if you know this number, but what percentage of deals fall into default and or receivership from a loan book typically? Like, what is an acceptable amount? Because I was a founding member of a lending business, and they're still going great guns. And we always sit around the table, and obviously really, really stressful in certain situations when you're about to put out anything between 5, 10, 15, 20 million pounds on a deal, and you're worried, like, are we going to get the money back? It's always that thing of, it's easy to put the money out, it's very difficult to get it back. But inevitably, 100.
There's different levels. There's different levels of defaults. I mean, first and foremost, I'm not going to suggest that defaults aren't higher now than they have been at other points in my career. It's just harder to refinance stuff. Lots of property that we lent on over the last 2 years is worth less now than it was when we lent. Some properties have been hit really, really hard. So a site with planning before, in a not too distant past, is worth a lot less now in most cases. I know I'm using sort of broad brushes, which I typically don't like to, but debt's more expensive, build cost is more expensive, and the knock-on effect is that the land is worth less. I mean, that land's always been valued on a residual basis. You get to the end and you work it back. So I don't think there's any argument there. There's obviously different stages of default. So the way I look at it, and just talking about bridging loans, which is kind of our core competency, you get to the end of the term, you haven't paid the loan back, you haven't made payments along the way if you're subject to making payments, or you haven't delivered on your development or your refurbishment. So those are kind of events of default. kind of the one thing that we're always watching is what happens right at the end, which is how many do we have to physically take and sell and repossess? And that number's still relatively low. It hasn't gone up as much as, those that get to the end thought they had a refinance in place. Valuer came out, said it was worth a bit less. Debt's more expensive, so the new lender wants to lend a bit less because of their ratio covers, and it becomes difficult to refinance. We're dealing with more of those distressed situations than we're used to. I'm not going to put a number on it, but it changes so quickly. But, comfortably say that more than double what you would expect it to be, as far as people needing to explore these situations that they weren't expecting. And I think we're at a point where it feels to me, and I'm trying not to be too positive about the market, but it feels like the sun's starting to come out, that people are expecting a rate cut instead of a rate rise next time. Inflation seems to be back to a level which everybody was shooting for in the first place. I've become very hardened in life to expect the unexpected. If car drove in through this window while I was sitting here, I'd probably be like, yeah, well,
what'd you expect?
Could expect that sort of stuff. I'm saying I feel like the market is improving. There are lenders, undoubtedly there'll be lenders and borrowers who have suffered through this period. I mean, when the cost of your borrowing on your typical house mortgage is more than double what it was, it takes some adjusting to, and people I think have, but I don't think everybody can adjust to it. So I still feel like there's some difficult times coming for some people. Lenders included, where they were doing punchy things. I think we have kept ourselves moving down the risk curve since inception. The idea of getting cheaper funding lines means that we can do more competitive, low loan to value, vanilla type loans, and we've done more and more of that over the years. Other things that could have affected us as a lending business are kind of the way that we charge borrowers on a tracker rate rather than fixed rates. I think made it difficult for us to write record levels of business, but meant that we weren't putting ourselves at risk as a lending business. So collections is really what the secret sauce is in lending. Lending money is actually very, very easy. If you put a flag outside this building saying we lend money, come back after lunch, there'll be a queue of people waiting to see you. Getting money back is the skill. And it's not getting money back when the market's booming and you can put a receiver in and they can list it in the next available auction and there'll be 10 people fighting over it is also easy. It's when you get to the end of a loan, site hasn't got planning that they thought it would have, and debt's really expensive. You've got to make a decision of, do we back this customer to figure it out, or is it better for us and for them if we dispose of the asset? And they're very difficult decisions. Sometimes the borrower makes it on your behalf and says, look, I won't, it's not for me anymore. And I guess a lot of my job is trying to figure out who's bullshitting and who actually needs a bit more time. We don't want to leave a trail of misery behind us. There's nothing positive at all happens in our office when a property gets repossessed and sold, however much it gets sold for. So
that's not the outcome that any lender worth their salt wants.
No, I agree.
Perhaps a controversial question. Should developers or investors or borrowers use a broker or go directly to the lender?
No, I mean, I'm a fan of brokers personally. I think you can self-diagnose lots of things on Google, but you can make yourself dinner or you can go to a restaurant. I mean, I like the idea of using, I value my time. We talked about this earlier on. So for me, although I'm competent and I could scour the market, I use a friend of mine who I've always used, who I believe is in touch with the market, is in touch with the rates, is in touch with the likelihood of that lender being able to deliver on what they say they're going to do. I mean, you can go on to Go Compare and find out the cheapest anything, but trying to get that over the line. Or finding out that your car insurance was cheaper, but it didn't include some key risks like, I like to drive abroad. I need to make sure that's there. So I think personally, I'm a fan of using a professional and paying them for it because you save in the long term. If you are a developer and you have a good relationship with a bank, for whatever reason, I can see an argument for not scouring the market and trying to move somewhere else, because I don't think price is everything. I really strongly believe that the value of a relationship is underestimated in this kind of Gen Z world, and I like dealing with people that know me, and if they say they're going to do it, they'll do it. From my broker to my lender. But, I also understand that I'm not sort of giving advice. I'm just telling you the way that I look at it. And the way that I look at it is that a broker should be able to get you a better deal, save you money, and take some hassle away. And that's worth something to me.
I appreciate the answer. Good answer. And very fair, actually, yeah. And there's some instances where it actually makes more sense just to go direct if you know you're going to get what you need and you get it quickly. Now, one of the things that I've come to know from meeting people that work for you is that you have a canteen where you put on for like catering for your team.
Yeah.
Which I thought was really, really cool. And they love it as well. They really appreciate it. So in terms of running a business where you've got hundreds of employees and that sort of thing, and keeping morale high and doing those sorts of things, why is it that you do stuff like that? And how did that come about?
Yeah, I mean, running a business is really difficult. Managing people is really difficult. I'd say it's one of the hardest things. You grow and you hire a few people and you're obsessed about your culture, or I'm obsessed about the culture and wanting to. Look, I think people come to spend more time at work than they do with their families. Most people do, which is kind of obvious, but when you say it out loud, sounds nuts. And there was a time where we had to convince people to come back to work. And I would, in the knowledge that I spend more time at work than I do at home, it's kind of logical that my work should be nicer than my home. People kind of go to a shitty office, stay there all week, and then go home to a lovely house, get into bed, switch the lights off, get up, get in the shower, and then go back to work. So I've always liked the idea that it would be appealing to go to work. When it came to us moving into the office building that we've looked at, I thought it would be really nice if we could do food, and we ended up looking at all the costs, and we have a chef in the building who does breakfast and lunch for everybody every day. It is expensive, but there are other things that businesses do, like, nights out and events. And I just felt that it would be more consistent to have healthy quality food available at breakfast and lunch, that people should come in, be a bit early. So obviously the benefits to the business are that people should come in, be early, be well fed, and at their desk on time, ready to go.
I love it.
And also, it gives us a chance to sit down and break bread together. Talk about your day, talk about your team, who's upsetting you, who's doing really well, what we could do better as a business. So I think it's really, really important that you should like and respect the people that you go to work with. I know it's not the same way everybody thinks, but I wouldn't accept any less. I just wouldn't do it anymore. That's kind of how my head is. I'd be searching to hang around with people that I like and respect. And I think it's something that we do because we feel passionately about it, but it is a very big luxury. And people get used to it very, very quickly. Without wanting to end on a negative, I think, I guess I got frustrated by this when, not this Christmas just gone, but the last Christmas, I like people to man the office. I mean, I'm a very much come to work kind of guy. I'm not a work from home guy at all. And it got to Christmas and I was going around the office saying, like, who's going to be in? I want to get some covers. People want to be able to answer the phones about their mortgages or their investments. We should be around. And we were going to break off into different teams. And then I got a message from the office saying, look, we've found out the chef's not going to be in during those days, so we're going to close the office and we'll just cover from home. And I thought, when did giving people fruit, breakfast and lunch every day turn into, if you can't give us breakfast and lunch, we won't come to the office anymore? And it is a difficult balance. I want to be generous and kind and give people the opportunity, but I also want the kind of recognition on the other side that it's an absolute fortune and we don't do it because we have to. To that end, I don't really know many or any other people that do it.
So you're not in property finance now?
No, so that's the story.
No, it's a great initiative, and I love food and I love breaking bread, and
Yeah.
and I think some of the best times I've had is around a dinner table, either with family or friends and stuff.
sure.
And we go out for lunches and dinners with business associates, people we're going to do business with. But actually, as a team, we rarely do that. To make that kind of normalized as part of a culture, I think that's a very, very nice
And
place.
definitely for our clients, one thing I like to do is I used to run around from meeting to meeting to meeting, and now I like to, because we've got a nice office and because we've got food, I like to have as many of the meetings at the office as possible. And it's also nice that your clients can come in and sit down and interact with staff and get themselves a plate, and we'll sit in the boardroom sometimes, or we'll sit out. And I think it's been, on the whole, very positive for us.
Good. What's the best advice you've ever received?
Surround yourself with good people. Quite simply, and on the theme of some of the things that we've discussed, I think, I've heard this more and more over the years, but I like to surround myself with people that challenge me and that are positive. And I think if you surround yourself with the wrong people, it can rub off on you really quickly. So everything from friends, family, kids, unfortunately, you can't choose your kids. Luckily, all 4 of mine are pretty good. But I think surrounding yourself with good people is really, really important. Make sure that you get good advice from people that you value, rather than talking to your mates who are always negative about the same things. So I think that's...
Average of the 5 people you spend most time with, something like that?
Yeah.
What's the worst piece of advice that you've ever had?
What's the worst piece of advice I've ever had? I don't know. I typically tend to ignore those things. I don't know, because I'd probably take responsibility and say it would have been my fault, whatever I'd have done, and not deflected and thought that's because that person. I think throughout my life, I'm trying to pick up sort of nuggets of things that I think could work to my advantage. Sometimes they don't. But I'm not the sort of guy that would have done something someone else said and then held them accountable
It's
for
interesting,
it.
actually. I've asked that to a few people that are doing, done some great stuff, and they almost, the worst advice, I can't even think what that is. I've blocked it out of my mind. It's like it was that bad. So this Property People podcast is called Property People because it's 2 of my favorite things, and you're obviously a very successful property person. What characteristic traits for the audience, if they want to be successful in property, what sort of characteristic traits do they need to have to become successful in property, in your opinion?
Be very resilient. So I don't think property is a get-rich-quick thing. I think over the different cycles in time, people have seen people getting rich doing property flips and trades and stuff that we were talking about before. I don't think that's really the reality of real estate. So my first thing would be play the long game. This is not how many properties can I buy, how quickly, with how little money. It should be, where do I want to get to in 25 years' time? And what steps do I have to take along the way in order to get there? Obviously, surround yourself with good people. If you meet someone good that gives you some good ideas that you can learn from, try to spend more time with them rather than think you've learned everything overnight. I think that'll do for now.
So be patient, take the long view, the long game, and be a good judge of character.
Yeah.
Good. Thank you so much, Duncan.
My pleasure.
So we'll make sure everything's in the show notes as well. I want to thank you so much for spending the time with us today. And we would like to actually do this again sometime, where we can find out how that loan book's performed over the years, and where you've taken these businesses, and in particular the fractional ownership stuff, which I'm super interested about.
Fine. Well, what we'll do is we'll return the favour, get you on our podcast in the near future, and then maybe we can do a follow-up, something different in the same studio.
Amazing. Thanks so much.
Thanks for your time. Thanks for thinking of me.
Cheers.
Cheers.